A very good morning to you. Welcome to the Jeremy Kyle Show. We've got Scotty from Essex in.
It's not mine.
How are you, Scotty boy?
Yeah, really good, thanks, Rich. Nice to be back on again. Surprised you keep inviting me back, but must have did something right.
We're a bit short on PCMs this week. They're all on holiday.
I can tell. But that's fine. Listen, I'm happy to step in anywhere, anytime.
So any of you that haven't seen Scotty on this channel before, we used to sit next to each other at the mighty Credit Suisse back in the day. Scotty used to fix all the printers.
That's right.
And was my job, or was it the other way around?
I don't know. I think we took it in turns.
Yeah, so job is the lovely affectionate term for junior broker.
Absolutely.
Which I guess is part blue button.
That's true, but also not helped by the lizard in The Simpsons being called Jub Jub. So it used to just sit there flicking its tongue in and out. So, of course, that was then adopted as an extra,
pretty much
slightly insulting way to talk, yeah.
Sounds like our emerging markets desk, really.
Very much so, yeah.
Good morning to you all. I see that chat is exploding. Everybody seems to flow from the Discord to the chat at 7:30. That's wonderful. Very, very happy to see that. Good morning, Monkey Man. Good morning, Julian. Steve Davies. And Monkey Man, I've had another request to send your latest AI script out to people. So maybe, if we got your permission, maybe pop that in the Discord if you can as well. Right, what's coming up on the show of today? Well, we've got that overnight action right through till 8:20. I think I might bring Angelina in to speak to Scotty because they were nattering away outside about Apple and so some other great stocks at the moment as well. Then Angeline and Jolie, our tasty expert who's flown all the way from Chicago across to have a nice summer in London.
Amazing.
Not bad, is it?
No, not bad at all.
Jack Maguire coming in for the opening bell. Then we've got the one, the only Gabriel Nussbaum. This man has over 1 million followers on social media. He is Mr. Finance, and that's going to be really interesting chat there at 9:10. And then we're finishing off at 9:35 with John Mayer.
What a great lineup.
He's
great lineup for a Thursday.
The Mayer mining expert.
Ah, okay.
So any questions about Rios, about BHP, about Glencore, about the commodities themselves? We've seen platinum through the roof.
Yeah, you've had a big explosion in metals, haven't we? It'd be interesting to see that, yeah. See what he says about that.
So get your questions in for John there. Two-tier Kia saying at last the quality co-presenter. Is this your buddy, is it? Is that Marcella?
That's cost me absolutely nothing, but thank you, two-tier Kia, I appreciate it.
I thought you were more reformed than Kia.
Well, it's an improvement on YouTube, I guess, so yeah.
Good stuff. Right, let's get into some overnight action. Let's see what Trump's saying this morning. Right, if you want to go straight on to the front page of the Times this morning, let's see what they are saying. Where's that come from? Yeah, so let's see. Oh no, that's the wrong laptop. Yeah, no, it's not. We're not meant to show that. Can't be showing that one. But oh, it's a good picture. Right, then the front page. The UK economy has contracted by 0.3% in April. So GDP lost momentum there after business front-loaded the exports to the US ahead of Liberation Day. So that is fresh off the press. And yes, shrinking by more than expected in April. So the FTSE is looking down this morning, but that's more from the fallout of yesterday's CPI, wasn't it? Scotty, take us through what happened last night.
Well, CPI was in line, and I must admit, I did expect a bit more of an impulse from the market, which it tried to do, but it sort of faded about kind of US mid-morning. And it's an old phrase.
It was a beat, if anything.
It was a beat, but again, I just think at the moment the Fed is just fixed on a Q4 hike because there's so much cross-argument in the press about when's inflation going to come through? Is it going to come through? And so on and so forth. And there's a couple of pieces which we can touch upon shortly if you want to. But then mid-session, it just really started to fade. And I guess it's the old phrase, travel and arrive, right?
It certainly felt like it, didn't it?
And the market's getting really immune to any headlines around the tariffs, it seems.
Yeah.
Unless there's a real new material run. I mean, you've seen Scott Bessent overnight, slightly conflicting with Trump, where he's been saying they're happy to extend the existing terms or the holiday for their 18 key partners, but then Trump overnight saying I'll be assigning new tariffs in 2 weeks if you like it or not.
Yeah. So let's focus on that CPI, because it came in at 0.1% against 0.3 expected. That is the expectation in the right-hand corner. 2.8, it beat there. 0.1 on the month-on-month on the headline, and 2.4. So 4 out of 4 numbers lower than expected on the CPI. So why didn't we take off? Chart off. So we had the, let's look at the 10-minute chart from yesterday on the S&P 500. You saw there, as soon as the number came out, oh, it can't get better than this. We've got Goldilocks. We've got low inflation. Unemployment is behaving itself. We've got a trade deal with China. We've got to buy this market, don't we? Doesn't happen as it's meant to, does it?
No, that's right. That's right. I think so often, as we've actually found this as well, Rich, haven't we, in days gone by, where you get this number out and we all jump on the headline, but then a lot of people start to dig down into the component parts.
Yeah.
And there was some of the regional feds have, certain measures around inflation. So they separate it into sticky and non-sticky. And it's the non-sticky stuff that's actually providing the drop.
Right.
So the stuff that's not really going down. And then I saw a piece overnight from Bloomberg, John Authors in Bloomberg, where he's talking about there's a company called Stratagas, has the common man inflation.
The common man inflation.
The common man inflation, which is...
Beer.
Food, energy, shelter, clothing, utilities and insurance, and that's still outpacing the rise in hourly earnings by a reasonable degree. So I think once they got through the component parts, the headline looks good, but as we always say, so you got that Stratagas piece there, and then there's some other charts up and down the article, really which we don't need to scroll through. But he comes up with some really good graphs where...
Can the guys... zoom in on that a little bit, if possible, please.
I'll try to zoom here if we can.
Oh, there we go.
Don't know if that's any better for people, but it's quite interesting, and which is then feeds into the fact how
brilliant,
lovely, But then interestingly, where you've seen firms like the Targets of this world have really poor numbers recently. Yeah, they're starting to bounce back. So there's a real mix. There's just no clear message at the moment.
So this is average hourly earnings on the red.
Yeah, that's right. Yeah, so earnings are going up, but they're being outpaced by all these key components.
I wonder if because obviously the gap there is back in 2023. The gap's been opened, and it's not getting bigger.
No, it's constant.
Yeah.
But I suppose how do you close that gap, right?
Well, yeah, how do you close the gap? And also, at what point do you just say, I have to curtail some of my spending?
No, that's true. But I think if you look at the components from those, what are you going to curtail? It's like always, some of our arguments are always around CPI and the core CPI. It's food and energy, right? Who eats and who uses energy? And this is the whole argumentative factor of it, isn't it?
We went to lunch yesterday. My goodness me. And beautiful restaurant. And a good friend of mine, Edward Hansen, his lovely wife, and then our good friend Melissa Marshall over from Australia. And really fun afternoon. But I looked down at the menu, 20 quid for a starter.
Yeah.
There was the usual conversation. Anyone else getting starters? Anyone else getting starters? And I was like...
Yeah, I'll just have some olives, please.
Yeah, that bread, how much is the bread? Oh, it's free. Okay, yeah, great. I'll have another one of them, please.
Yeah, and a tap water, yeah. No, absolutely, yeah. I mean, it is...
£38 for a main and £20 for a starter. So, luckily, when I was at the bathroom, Edward got his credit card out and covered the whole thing.
Well done, Rich. Although sitting in the bathroom...
Thank you, Edward.
Yeah, exactly. I think sitting in the bathroom for half an hour is a bit rude, Rich.
Yeah, I know, yeah. I think they started to get worried about
looking at the door, isn't it?
Yeah. Did Halibut have...
Yeah, no, it's a very real thing. I mean, if you speak to people in the street, no one's thinking things are great and any cheaper. I mean, I was in Greg's this morning, which I know is a good name of yours.
If anybody's wondering, the mix between us.
Yeah, exactly right. But I heard a guy in the queue in front of me. He was complaining about the size of their pies getting smaller.
Are they really? That is some
Yeah.
spot on information here.
This is what you call real world economics. You see, you don't need to read a book. Just get out there and.
Who needs Gary Stevenson when we've got Scotty Byrne?
Absolutely.
So there it is. Come back off again, actually, isn't it, old Greg? So they are doing anything possible to get that P&L up on Greg's, get that growth back in, or not growth, shrink. Probably helps your waistline as well, though.
Well, that can't be bad, can it? Can't be bad. Summer's coming.
Yeah,
so,
exactly.
yeah.
Summer's coming and you're off to Ireland this weekend, aren't you?
That's right, yes. It's my lovely sister-in-law's 50th birthday, so shout out to my sister-in-law, Mary. So looking forward to seeing her and the rest of the family.
Very happy birthday, Mary.
Yeah, and as we were saying, it's my son's second to last A-level today. So, yeah, he's near to completion, and he told us he's going straight out of the exam hall and straight to the pub next week. So
with all his buddies.
With all his buddies, so yeah, that'd be good.
Brilliant. What's he thinking about doing?
Well, he's actually managed to get a degree apprenticeship as a quantity surveyor.
Oh, fantastic.
Which is,
well done, Eden.
So I thought a quantity surveyor was the guys who were standing at the side of the road who had the tripods and the high vis, but apparently that's not what they do.
It's not?
No, it's an accountant for the construction industry.
Ah, okay.
So he managed. So over time he'll be managing all the contracts and the suppliers and the contract law and wrangles with clients. But yeah, it's a huge Canadian firm. He's got an apprenticeship with, so he's very happy about that.
Yeah, good. Good to hear people going straight into industry.
Yeah, absolutely. I think it's it can be. I think you got to choose your profession, but yeah, it's a great thing actually seeing those opportunities are there.
Good, right. Look at this thing. Motor. That's it. Smarter Web 140 traded yesterday. 140 up 25%. And you see it closed there about 125. So that was down to the American listing that was announced yesterday morning. Admission to trading on their OTCQB venture market. So as
easy for you to say.
Yeah, that old one, no?
Yeah.
So as soon as the US opened yesterday, we saw this thing absolutely roof. Here it is. So it was trading at 115, very happy. Whoosh, up to 140 it goes. Amazing. Absolutely incredible. So maturing there, saying yes, he has taken a little bit of profits.
Well played. Really well played.
So I think he's up 500%.
Incredible.
And good stuff. Andrew McKelvey saying, great choice by your son.
Thank you.
Pass on.
Yeah. I think it's really exciting. It's one of those jobs where as soon as you pass, you've got your piece of paper in the hand, you can apparently open an atlas of the world and work anywhere.
Well, Middle East might not be the first choice after what we're seeing at the moment. So crude up strong yesterday. We were trading, reasonably happy around 64.70 the last few days, and $67.
That's cool, Axel. Good shout, Axel, eh?
Yes.
Right.
That's first thing you said when you came in this morning.
Yeah, absolutely.
Trade of the week.
Absolutely. Yeah, it's extraordinary. I just think it shows the positioning. I mean, look, you can see the drift up, and the thing is, so we were sitting talking about this in the US trading session. Oil is so hard to trade.
Yeah.
So I don't know if you've ever traded it, and I actually made a point. I didn't name your name, but I said most people I know who trade oil well actually use options, because you just need the time for it to play out. If you try and take short-term signals off oil, incredibly difficult.
Here we go. So oil prices tick up on worries of escalating US-Iran tension. The United States has started removing people from the area. Personnel being moved out of the Middle East, which is normally a proper red flag, isn't it?
Yeah. Generally, yeah.
So I met my friend from school days. Actually, he worked for BP, and he was responsible for getting everybody out of Libya.
Oh.
And he says he'll never know a 36 hours like it. It was just the most frantic. As soon as the button's pushed, then it's right. Okay.
It's almost like a film, isn't it?
Yeah. It probably could be. It probably could be quite a good series, actually.
Yeah.
So, preparing a partial evacuation of the Iraqi embassy. the US is doing, and yeah, just heightened security risk in the region. So that saw oil up and away, 67. As Scotty says, really, really tough, because this one looked like it was behaving itself around 60, around 62, then 63.
Yeah.
But yeah, right up to 67.
And again, it's just another little thing in the background with metals going higher.
Yeah.
If you get a summer of elevated tensions in the region, suddenly the price at the pump starts going a bit spicy.
Right. Rest of commodity world. Scott, you go and take us through what's been moving overnight.
So it's a bit of a seesaw. We've been speaking about this. Is it the precious metals that are holding up the gold price? Because if you look where equity markets are, you're just getting a grind higher in gold. We just keep seeing it generally. If you're watching it on a 24-hour chart, it generally seems to tick up in Asia, which might lead us into that story in the Times that we spotted a little while ago. But yeah, I mean, it's all sort of moving in unison. I don't know what the trigger has been, but we've been sitting there, like if you watch the copper price, it's been stuck in a box for weeks and weeks. Then all of a sudden it's, simply broken out.
Yeah,
whether that led,
exploded.
there is a lot of people like to trade the gold silver spread or watch for inflection points. There was a bit of that on LinkedIn the last week or two, where it had gotten to extreme levels.
Okay.
So that might be a bit of a catch-up trade. But yeah, I mean, at the gold price at the moment, there's still, even though on the face of it, things are looking better.
And take us through that story in the Times then, because that was
absolutely. I thought it was really interesting. So I'm just going to jump to the page here. So we've seen gold now outshine the euro as the second largest global reserve asset. Just reading the headline there, second only to the mighty dollar. But it's interesting where gold is still not a valid liquidity asset under Basel III.
Right.
So these must just be central banks, and I would imagine, look, it's been fairly blatant from the Chinese. So if the Chinese are buying gold, generally you would imagine, and I would imagine with Japan, with the mixed picture there, they'll be buying gold as well, just as a bit of an insurance policy.
True.
But yeah, I mean, look, you can see the jump there, and that must be central banks worldwide, because a few of the Asian banks are GSIBs under Basel III. They can't hold gold as a liquidity asset.
And 20% of global official reserves. That's a huge increase from I always remember it being like 12 to 14.
Yeah. So whether there are moves in the background to incorporate it into Basel III, but I think liquidity is a problem in gold, because just imagine if something happened that made that price reverse. There's a lot of people who are trying to run for the door. And I think the problem is the actual real tangible
I think that's I do not see this thing ever going below 3,000 again.
Oh, no. I mean, I think the stage is set now. I think 3,000 is the new floor. But I think also the issue, I think, for liquidity provisions is the fact that I think it's, is it still the case that the actual physical gold is like 6 Wembley stadiums or something?
Yeah.
So
6 Wembley stadiums or 7 Senegal stadiums.
Yes, absolutely. So yeah, I thought that was really interesting, and again, that just underpins that price in gold. I think for the foreseeable, just as you say, I don't see that changing. Just really don't.
Away from the numbers, saying Vodafone buyback. You must be using harmonic averaging. Any of you who missed the interview with Mike Singh yesterday? Really, really interesting. Ex-managing director from Goldman Sachs, head of execution there in a previous career, now runs his own business looking at company buybacks in the UK. He gave us what can only be described as a mic drop. See what I did there? Nice. Explaining that harmonic averaging actually benefits banks both ways, if the price goes up or if the price goes down. And their profit that they're getting from doing buybacks is gigantic.
Yeah.
And the more volatility in a stock, the more beneficial for them.
It's interesting.
Which is especially interesting when they're controlling how much stock is being bought back per day.
That's true.
Whether in Vodafone it's 18 million.
Well, and also as well, a lot of things that the companies pay for is the discretionary aspect of non-disclosure.
Right.
as well.
And what does that mean? Sorry.
Well, so if you used to, I'm sure you remember those days of ECM would send you an order, and it used to be a case of someone from ECM would say, okay, here's the plan. But all you get nowadays, or you used to get nowadays, is an order from ECM, like from any other client, with, you know, a set of limits and a tactic, and that's it. And they won't say to you, this is going to be happening for 3 months or 3 days. So you just get sequential. So it's that drip feed through the Chinese wall, as it were, from ECM, where you just get that element of discretion now. And I think a lot of the companies effectively insist on it. But
yeah, well, I'm not surprised. And hearing from Mike yesterday what might be going on was mind blowing. So we'll put that up on the YouTube today. If you're interested in this, just math, the magic of math, then this harmonic average calculation was it. I've run it through a few people here, including our own investor relations, and everybody kind of looks at it and goes, yeah, that I can see how that's happening, but hadn't really ever thought of it.
yeah.
So yeah, good. Right, Kate Murphy saying good morning, chaps.
Morning, Kate from New Zealand. Thanks for tuning in.
From New Zealand. What's the latest, Kate? Are you on the beach? Oh no, it's winter there, isn't it?
Yes, that's right. Yeah, she's certainly cycling a lot. She's running a lot. So yeah, it can't be that bad weather. So yeah, enjoying themselves.
Right, what are we? 7:51. We've got Tesco numbers to look at. Come in ahead of expectations. So we've got 4.7% on their growth versus 3.2 expected. That is Tesco like for likes. And then, we saw them maintain guidance for the full year. So numbers on both lines managed to beat, but only holding guidance for the year. So we'll have a pre-market for you there, up 2%. Pre-market. Considering the run they've had, that's pretty good, isn't it?
Yeah, I think margin pricing is still there, as we saw on the graph. I know that was in the US, but I would imagine margin pricing on staples is still pretty decent.
Yeah.
Because I think that's one of the things. If you walk up your local high street, there's lots of sale signs in the normal retailers, but I'm not seeing much evidence of a price war in staples at the moment. There's
Tesco. What a performer. So you had it. That's a little bit too long to look at, probably. That's going back years. But certainly if you bought this at the start of 2023, even 2024, you've seen it go from £2.80 to £3.80. For a food retailer,
that's some move.
Will take 16% a year.
Yeah.
Not too bad. Right. Otherwise, we are looking at Segro. Unchanged, CFO to step down, and then Halma up 2%.
Oh, Halma, crikey.
What did Halma do?
Engineers, they were Midlands. They started out a Midlands engineering company, I think, if I remember.
Right.
Most of the engineering firms I used to trade back in 1992 were generally from the Midlands, which is why Birmingham used to have its own stock exchange.
Did it really? The Birmingham Construction Stock Exchange?
Yeah, effectively, Industrial Revolution all happened around there, right, and further north. So that's why I had a stock exchange in Birmingham.
Why it's called the bull market?
The bull ring.
The bull ring.
Yeah, it could well be. Could well be.
Good. And then we've got ex-dividends today from the mighty JD Sports. It's not a big one. 60 pence there. Not sure you'll get a new hoodie for that.
I think some socks maybe, but
yeah. Land Securities 12 pennies. Scottish Mortgage Investment Trust comes off 2.7 pence. Now with the dividend in Scottish Mortgage Trust, that helps us because we're trying to get up to that level. We're struggling a little bit this week.
Yeah.
Uh-oh. Subscribers, 942 subscribers we've got. Are you subscribed? Scotty, are you subscribed?
Are you not entertained? I'm subscribed. But surely you must be entertained. That's got to be worth a couple of hundred.
If you find this bald bloke entertaining, I can't really say anything.
Somebody find me entertaining.
Yeah. I see you've shaved it again, actually. I thought you were letting it grow.
Yeah, well, I think the problem is it's the 30th year of me shaving my head this year. And the problem is I'm just actually scared what would happen once it gets beyond a certain length.
Yeah, true.
It looked like Thatch Cottage or something.
So if you're not subscribed, please hit that subscribe button now. Go on, hit it in the break, because in the break we're going to be looking at a chart of the day and it is a UK stock. I'm being told it's a UK stock.
Yeah, it's Monkey Man. We have got the 30 bond auction today, 6 o'clock. And we've got a little graph of the 30-year from when you want to look at that as well.
So that'll be coming up at 8 minutes past 8. We're going to look at, everybody needs to be at their screens at 6 p.m. tonight. But we'll talk about that just after the open. So, stock of the day, Scotty, are you ready?
Okay.
On your marks.
Right, so let's put the old
Get set.
spectacles on.
Who's the fastest finger first? Go.
It's not, is it?
Jim Paxman, well done. That had us both stumped here.
Yeah, well done.
London Stock Exchange.
Yeah, I mean, last time I looked at them, it was a £7 stock, I think.
Really?
Yeah, last time I looked at them.
What was that, 1985?
It probably was, yeah, it probably was, to be honest, yeah.
London Stock Exchange, our sponsor for the morning opening bell in the future at some point, possibly.
So I think if we have a hint,
Fancy
if we get some Tipex, we can write LSEG on there, just as a little hint.
Can we do that? Let's have a look at that. Well, we've seen the graph. But what about over more years? Wow. What? How can it just not be that easy?
But it also shows you as well, right, where
There you go, £7 to
negative press
2010.
around, listings abroad and so on. Basically, exchanges now are basically a data center, right?
Yeah.
Because they sell their data, which is the most important thing that they have, is their data.
What is this in? So it's gone from 10 quid to 100, so a 10x in 12 years.
So I think it's old Xavier Rollet that took them on the real bull run.
Yeah. Oh, 5 seconds to the bell, Scotty. Are
is
you
it
ready?
really? Goodness me.
Talking of the London Stock Exchange, here we go. Scott Byrne opening UK stocks as we on this morning of the 12th of June. We're getting towards that longest day of the year, only about 10 days away. We're watching Tesco's.
Grimy, yeah.
What else are we watching, Scotty?
I think Rolls-Royce would be quite interesting to see how they push on after the
Rolls-Royce?
news.
Rolls Royce.
Rolls Royce, yeah, absolutely. Yeah.
Right, what do we got on the upside then? It's a slow open. It is a slow home. Oh, BP reacting to the oil price. They're up 1.3. I'll have to see if I'm still short the puts, actually. I think I am. Yeah, I think they're gins. Perfect. God, that's gonna come in nicely.
Well done, mate.
Shell up 1.1%. Tesco up 1.25. So £3.90 for Tesco's. That has been a really nice earner. I think my mum might have some of those, because I always say buy shares in where you spend your money, and just that's
the top 5 things you spend your money on, and
yeah,
absolutely.
Imperial Brands.
Should buy shares in Amazon then, really, shouldn't I?
Yeah.
You look at our hallway most days.
There's a few deliveries there, isn't there?
Yeah, exactly, yeah.
Right, how are those mining stocks doing then? Oh, EasyJet getting cuffed. That's not ex-dividend, is it?
No, I saw American Airlines got smacked yesterday as well. I don't know if that's a sudden move in oil, bit of a sentiment thing.
Of course it is.
That's the old airlines.
That's why we get the 70-year-old in.
Absolutely. So 113 years of experience.
So that's taken Wizz Air down, it's taken IAG down. So if you're long oil, short airlines, you are a winner today.
Now, Rich, as a mining guru for you, BHP, is that the one that's negatively correlated with oil? I know there's one of them that doesn't like a oil price.
Broken Hill, as it used to be, which I found out at the weekend. So BH, Broken Hill, is, and proprietary is the P, the destination for the longest train ride by a steam train, which was the Flying Scotsman, in history. So it's got the world record there, and it went across Australia to finish it at BHP.
Crikey.
But yes, they used to have an oil, but they sold it.
Right, okay, yeah. So that's an input cost rather than a output profit, isn't it?
Yeah.
Yeah, okay.
Yeah. It was meant to be a great trade at the time, but it didn't really pay off. No. Anglo American down 1, Rio's back below 43. That just cannot get any bid to it. Is that new lows for the move? No, not quite.
Not far off it though, is it?
Not quite. That's the daily. Let's do the. Yeah, that's so the latest move down has been 42.71. So that's the level to watch in Rio Tinto. And yeah, it's a bit of a soggy day actually, isn't it?
Yeah.
As Steve Davies said in the south of Wales there, but it's soggy.
Yeah, so that's, well. Soggy South Wales and soggy LSE.
Yeah. So if you are in BP, Tesco or Shell today, you are onto a winner. Sainsbury's also getting helped by that, as are March and Sparks. Where's your shop of choice, Scotty?
Well, it should be Lidl or Aldi, but unfortunately, brand snobs as my household is, it's Waitrose, exactly. Especially because I'm now instructed by my kids where to buy a particular thing.
I love it.
So yeah.
So the kids are sending you to Waitrose for the shopping, but then you're stopping at Greggs on the way to get a bacon roll.
Basically, that's it. Exactly. It's the only benefit.
Right, SSE poking its head above £18. That's done really well. And BT at 180. Look at this thing. I mean, you know, for a stock that's meant to be in a crappy, I've certainly picked the wrong horse there.
I think so. So all I know is of BT, it's their monopoly on the landlines through OpenReach.
Yeah.
And so we're on the verge of getting full fibre broadband installed.
Okay.
So I think because they own that real estate, so now everyone's moving to faster broadband, more bandwidth and so on. Maybe it's like the old thing of if you're around the gold rush, or if there's a gold rush, own the picks and shovels rather than the...
And that was the argument 18 months ago. So where was the stock 18 months ago? God, yeah, they were right. Around that last quarter of 2023, the stock was at £1.10. And I read a great research report and said, look, this company has put so much investment into the ground, and soon, i.e. in 18 months' time, they start to reap the benefits. And that's when they were talking about why it would be actually sort of good for a takeover. Yeah. Because it'd taken all the hit early, but now it gets all the benefits. And that's it.
Yeah, amazing. I was actually watching Clarkson's Farm last night, episode 7 or 8, and his farm manager. Have you ever seen it?
No.
Right. So his farm manager said, this was a series that encompassed him opening up the pub, and he's running through all the costs. Wi-Fi, £1,000 a month, because it's a business. So a friend of mine up the road from me manages several properties in construction. He's got home broadband for business.
Right.
£500 a month.
Right.
For one household.
Oh my goodness. So, I mean, that obviously gives you
Oh yeah, it's super
100
fast.
people
I mean,
in it or whatever.
yeah, I'd say exactly. I think it's a limit on. I think it's up to 10, and then I think it's kind of scaled on size of business. But the speed is incredible. I mean, if you look at him on his laptop or phone, he'll load a film up, and it's literally that quick.
Yeah.
But £500 a month, it's
Yeah. Right. What about Europa? Shall we have a quick look at the Germans? See how they're doing this morning. Rheinmetall back up 1,740. That one always gets me. Total obviously following the oils up. ENI is.
Yeah, so oils. Oh yeah, what was it? Eon.
Yeah, Eon defensive. So it's the defensives and
Energy. I mean, energy was the only sector that was up in the US yesterday as well.
right.
So that's very much a pattern follow through.
So my Occidental might at last be finding a bit of a bid.
Yeah,
Same
absolutely.
theme in Europe as well. Air France, Lufthansa, Ryanair. Air France getting smashed though.
Well, interesting. The banks were a bit softer as well. I noticed Deutsche was down. I saw Barclays was down in the UK.
Yeah. All the winners. I guess because rates are now coming lower.
Yeah, and I suppose Barclays as well with that weaker UK data as well.
Yeah.
I did see a piece there expecting another 2 cuts from the B of E. So they're tracking the ECB a bit more rather than the Fed, which they used to obviously all follow like lemmings, really.
Good. Right. What are you guys watching then? What is the latest one on your radar? Let us know. And Ange and Scotty will take a look at it in the next section in about 10 minutes' time. But I did say at 8:08 a.m. we shall be taking a look at today's 30-year bond auction.
Absolutely.
This is the big one. Why is it so important, Scotty?
Well, this is what, if you remember about a month ago, you had all these concerns about the Japanese 30-year bond market where there were no bids, which then obviously troubled yields in the 30-year across the world. 30 years important, for those who don't know, for setting mortgage rates in the US. The 10 years more used for risk metrics around the globe, or certainly in Western markets. But yeah, that 30-year, that's the thing that sets mortgage rates and just shows basically how much you want the US to pay for you to lend it money for that long. Yeah. That's the simplest way to think about it.
It's been the one that's under strain as well, hasn't it?
It's real strain, yeah.
We can see last time 4.82%. Let's see where we are now. Currently, on the 30-year, we're 490 really, isn't it?
Yeah, so I have a chart actually up on the 30-year on my laptop just to have a look from the last time. So you can see the spike there about, when was that? That was, yeah, almost a month ago.
So this is the yield.
20. So that's the yield, yeah. So that's come right down, and it's still coming down. And generally, from speaking to fixed income brokers, you'll generally see. So if you find the ticker for the US Treasury 30-year futures, if that starts selling off, that means yields are going up. So it's another inverse thing you got to sort of think about. But yeah, I think I would certainly start watching that from the US Open.
Can you put this on a 1 day so we can have this on our screen? This is Trading Edge, is it?
Trading View.
Trading View, sorry. Trading View, fantastic website. And
so this is a 15-minute chart. So it's got about 3 or 4 days here. I mean, I can shorten it even more. Let's make it 5 minute.
Because obviously the results will come out, but it's hard to interpret what the results mean. But this will tell you straight away if you have this up. So
you can see that sell-off yesterday. So that was the CPI data yesterday.
Of course.
And then you've just got that drift lower again. I mean, again, yields are drifting lower just because there's obviously a bit less stress. Again, I kind of see these things about stealth QE from the Fed where it's injecting liquidity into the Treasury market, but it's not QE. Right, it's not QE.
No.
Yeah, so again, I mean, at the moment, you'll just get, so all this will really be in US bonds. It will generally only move from Japan because a lot of those guys like to trade the Treasuries against the JGBs.
Oh, yeah.
So you'll see movement in the futures and the yields. Obviously, that's the cash yield, so it will sort of drift. But if you had a chart of the futures up, it wouldn't look that dissimilar. So you can bring that up. I'll see if I can find the ticker. I don't know if we can find it in IG, but that's normally the best thing because a lot of these guys will like to pre-hedge. So I think the process is they take sort of early looks, almost like a book build.
Yeah, okay.
So there's early looks, some of the demand and who it's from, and then afterwards the key is who the buyers are. So it might go well,
So even
but
at 5:30, have a look.
yeah, even at 5:30, if you get the futures up or watch those yields, it's nothing different. But again, it's the composition of the book afterwards, which you generally
Oh, shit! It's the market
It's the
makers. They've had to
basic
take everything.
yeah.
What was it they called them again? Not the market makers.
I can't think of fixed income. There's so many. There's actually even more archaic terms in fixed income than stock
Basically,
market.
it means they've had to soak up.
Yeah, exactly right. They've had to take it on their books, and this is why the argument goes that the Fed's looking at the SLR, the liquidity regime, to change it so they can buy more bonds.
Right.
Banks can buy more bonds.
Fudge the system. Yeah.
Hashtag rigged much.
Yeah, exactly. Okay, so that is Trading View.
That's Trading View.
Website.
That's chart on Trading View.
And
Yeah,
then search US30Y.
that's correct.
That's what you need to be doing from 5:30 this evening. Put what's on at 5:30? Is that what's the quiz with the chase? That's it.
The chase.
Oh, I love
yeah,
that
exactly.
programme.
Yeah, exactly. It used to be Neighbours. You see, you could watch Neighbours, then watch the bond auction, but sadly,
And Home and Away.
yeah, home and away as well. Yeah, but sadly, those days are gone. It's the chase instead. Still, if you watch it, you might learn something. So,
We so this lunch I had yesterday. So when I was in New Zealand, obviously I couldn't work because I didn't have a visa. So after 6 months, you're just bored, right? So you do anything. So I was dog walking. Had my favourite dog Layla, and then our friend Melissa said one day, "Oh, I've got a yoga class. Do you mind babysitting for an 8-year-old?"
oh,
I was like, "Yeah, all right, fine, I can do that." So anyway, we're sitting there, and I'm speaking to Romilly
yeah,
like an 8-year-old, right? Like kind of, simplifying things and things. Anyway, her mum Melissa had left some cash for dinner, and she said, "Oh yeah, you can just get a takeaway, get whatever you want. It's almost like a sort of golf estate that they live on. So
Okay.
there's a
Yeah,
few
very nice.
restaurants
Yeah,
on the
lovely,
estate.
yeah.
So anyway, half an hour we're playing Roblox.
Yeah.
Is it Roblox? Yeah. So she's shown me the computer game and everything. Oh yeah, cool. She goes, "Are you hungry yet?" I was like, "Yeah, I am actually quite hungry." She goes, "All right, wait a minute." Goes, gets the phone. She goes, "Hi, yeah, how long is the delivery tonight?" And they said, 45 minutes. "Oh, no, my babysitter's hungry. Need to be quicker than that." Boom, phone down.
Wowza.
She goes, "Pizza, all right?" I said, "Yeah." She goes, "Okay. Yeah, how long's the delivery?" 15 minutes. Excellent. Right. Yeah, what do you want? Do you want margarita, pepperoni? And she ran me through a list. She's like, "Yeah, okay, we'll take one pepperoni, one margarita, and some garlic bread as well. Yeah, how long's that going to be?" "Great. Okay, yeah, put 10% on. That's fine." Boom. I was like, okay, this 8-year-old is not an 8-year-old like my nephew.
Sales traders are born, not made.
Yeah.
Right.
It's like so impressive. So from that point,
Amazing.
I was like, okay, I don't need to speak to this girl like an
No,
8-year-old.
absolutely not. Absolutely. I want to thank you from Parky as well. He's on Amazon, so we can always roll back the ears and watch Neighbours on Amazon. So, yeah, very handy.
Can't think of anything worse. Good. Right, it is 8:15 on this wonderful June 12th morning. Did you get caught on the S&P 500 last night? We saw everything come back, really. Let's have a look at where futures are on this fine morning. Once we get oil off the screen there. My old adage would be, on a night like last night, it gets to 6,060. And if it ain't going up, there's only one way it can go.
No, it's true.
And that's what the market decided last night. It found its resistance point. It had taken all the possible positive data and it had put it into the price, if not a bit more. And suddenly it started to look out and say, right, what's the next data points? The next data points are the 30-year auction.
Yeah.
Who is the new buyer?
Exactly. Who's
And
the
it couldn't
marginal
find
buyer?
one.
Exactly. And I'm sure as Axel will tell you and all other of the technical analysts out there, the market loves to focus on big round numbers.
Yeah.
So you got 6,000 there. That's going to be
That's it. There's
a pivot
probably
point
exposure for June expiry.
It will be a pivot point for now, for sure.
So yeah, so is the market pinned to 6,000 there? You've got FTSE holding very well though. That was down 50 basis points earlier. And we've seen the FTSE DAX given some up, down 70 basis points. Vol up to 20, and that is on the back
That's quite
of the Middle East.
Isn't it? Yeah, absolutely, yeah.
So Lutnick can come out and tell you how great this China trade deal is. Trump can say deal done, but that's it now. The positives are there. What is the next positive? Let me know on the chat there. What do you think the next possible positives could be for the S&P to come higher? Yeah, go on then, Terence. Stick it on a poll for us. Good shout.
Yes, that's right. Good shout.
Is it inflation data? Because you've just had it. Is it jobs data? We've just had it. What's the next possible positive? I'm glad to see the producer was paying attention. What's the next possible positive for the S&P 500? Is it inflation data? Is it jobs data? Is it earnings? Well, it can't be because you've just had them, and the earnings season's done. So, yeah.
Some of these even smaller indicators, like the PPI, I know it lives in the shadow of the CPI.
And tariffs.
Yeah, that's right.
Tariffs, well, you've just had tariffs. So every possible positive you've had, and it's in the price. That is why the market came off last night. But let's see if anybody can... Andrew McKelvey saying multiple trade deals. Of course. The Fed spike, you're right.
Yeah.
Okay, is the Fed positive? Is Jerome Powell suddenly going to roll over and go, oh yeah, rate cuts are coming to you?
I think it all depends which metric you're using, though, is that people have seen, or I'll say the market, retail have been the only buyers on the way down and back up, but the bigger institutional money apparently is still sceptical. I've not seen the latest flow show from BAML. That could be quite interesting.
They'll be in by now.
Yeah, they should be in by now. So yeah, that could be the only thing that just kind of makes it drift higher. And as they say, Rich, as you know, never short a dull tape.
Yeah, that's true. But yeah, I think that's what caught us on the 5,800 to 6,060.
Yeah, I think that's probably true.
Right, if only time will tell goes in there again, I swear to you.
Yeah, exactly. Come on, people, get off the fence. Get off that fence.
So every morning I go and pick up a coffee, and I have to get producer Phil one as well because he loves an oat milk,
being sacked, yeah.
but he cannot have normal milk. If I see only time will tell in there again, I am going to get normal milk and I'm going to write oat on the top.
Yep. Yeah.
Or is the next positive Rachel Reeves being sacked from two-tier gear? Good stuff. Right, on that note, Angeline coming in to grill Scotty on the latest ideas across the pond.
Goodness me.
We'll see you shortly.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, trader friends, welcome back. It's the Ong Show. My turn with Scotty.
Hey everybody, you'll see we've switched seats.
We've done a switcheroo. Andrew McKilvey there coming online saying Wizz now down more than 4%. Yes, a lot of the airline companies. Let's check in on EasyJet as well whilst we are on that, because we know that airlines, you tend to move in tandem, much like sheep. I have a bit of an agriculture background, so I often refer.
That's all right.
Hey? EasyJet down 2.7% there, but it has to be said it has had quite a strong run since the beginning of April. But you know, we are seeing a bit of a correction there today, this session. So we were talking about Greggs before we came in. You a fan of Greggs as a stock, Scotty?
Yeah, I think it's a great. I think it's a great company. I think it hits. It's one of those companies where it's interesting. Where I normally judge on sort of real world economics. So, if you're walking through the middle of the city and you're seeing a lot of Greggs, then it means it has the clout to buy.
That's right.
Stores there.
Yeah,
You can afford the rent.
And isn't that an interesting data point? It has more outlets than McDonald's now. Is that right? Have I got that right?
I mean, it wouldn't surprise me. And also, as well, there are a lot of people who work in the city who don't want to pay £9 for a sandwich.
Yeah. And like coffee's now insane.
Yeah,
One place charging £5 a flat white. I mean, you know.
Yeah, it's crazy. I stopped this morning, had a coffee and a water. It was £4.
So I have an interesting story with Greggs. So I traded Greggs when it had that vegan sausage roll bounce. Do you remember that? The vegan sausage roll bounce.
What was that, 3 years ago?
A bit longer than that, I think.
Yeah. 4? Yeah, I remember it. Yeah, I do remember it. Yeah.
I went to try to look for a Greggs. We don't have one in our area. So I tried to look for it because I thought, I need to try this out, right? I need to, before buying into it. Went to one the closest I could find, which was somewhere, I think it was like West Norwood somewhere. I had to like drive ages to go and get there. Managed to get there, and it just came out. There was a long queue. They just pushed the...
Oh, wow.
Right?
Okay.
They just pushed the baking trolley thing. I don't know what you call it.
Yeah.
Out, right? And so I said, I have one, thanks. And they gave it to me, and I thought, actually, I love meat, and I can't tell. So I thought, I'll do a test, right? And bring one back for my husband. And then he didn't realize he was allergic to corn, which is the ingredient. And I almost accidentally killed him. Real story, he threw up about 3 times that day, thought we might have to take him to hospital. And lo and behold, he didn't realize until that day that he was allergic to corn. But that is the ingredient that makes it taste good.
Of course. Okay, makes sense. Yeah.
Yeah.
Well,
I
Thank
bought.
heavens
I
you
bought
were
then.
at home with him
I
as
bought.
well, and you could help
But he
him.
couldn't tell. He couldn't tell.
Yeah.
And he continued eating. So
Absolutely, a lot of these products are excellent.
yeah. We talked a lot about the US as well, and let's just whack up the S&P 500, because I was looking at that yesterday when that CPI number came out. I was on right next to Luke Moore on the trading floor. He was eating his lunch, not Greg's, by the way. He was eating a very fancy
very good.
sushi lunch.
Oh, wow.
Yeah, with sashimi and everything. And just whacking up the hourly chart for you guys so that you can see what we were looking at yesterday. So, this is the hourly chart there. Looking back at the number. I mean, really, markets overall didn't seem to move very much. It seems almost like markets are now looking at, the data points and also the, tariff talk, because we got details out on that yesterday between the US and the Chinese.
I think just looking at that, what's catching my eye versus, say, a couple of weeks ago, is that even though you're getting these midday sell-offs, there's always that last kind of hour or two of the day, you're getting a bit of supportive buying where that could just be funds drip feeding money in.
Right.
Especially with that kind of style. So even though, as you say, it's not holding those highs.
It's not holding the highs, but it's interesting that it is, creeping high, then moving back down, but then creeping back higher again, moving back down. So, you're right. Someone's coming back in big time, right?
Yeah.
Just going to widen out that view as well to a daily chart here, because, look at that bounce back. I mean, since that puke out, the bounce back has been, impressive and well supported, really.
Yeah.
Which, in my humble opinion, and correct me if I'm wrong, I'm just thinking markets just seeing the fallout between, Trump and Musk.
Yeah, I mean,
just
markets
ignoring it, really.
Yeah, exactly, yeah. Markets are an opinion tool, but more than anything, it's money flow.
It is money flow, and it is a gauge of, what money managers, are thinking, right? Big institutions.
Absolutely.
So I just wanted to also show you, if I can come off my chart, because I'm going to bring up another one. This chart that was sent to me yesterday, which I found quite interesting. It comes in a time, this April correlation, and you can see the blue line, or it kind of looks like black, is the US dollar index, the .dxy. The S&P 500 is that yellow line there. And the gray line is the iShares US Treasury Bond ETF. And I mean, to me, this looks like, quite unusual, cross-asset correlations, all involving a simultaneous drop in the dollar. I think this de-dollarization theme is going to keep giving. What do you think, Scotty?
Yeah, absolutely. I mean, again, as we saw in that reserve data that Rich and I touched on earlier, it's still the number one. But I think what's interesting is from that divergence, that's what's making, I think, a lot of the people who are slightly longer in the tooth, who have been schooled in these kind of metrics, are scratching their heads and saying, well, something's not right there. But I think what's interesting is that the last, 3 weeks, it's not making new lows. So it will pause for now. I think what would be really interesting is if you saw a break in the trend, like if you see the DAX lower or Asia lower materially, S&P start to pick up, that might be a return. But at the moment, if you're managing money, and I always say to people, if you were managing your own money, what would you do? Has what's happened make sense, and what's going to change? And right here, right now, as we were saying about the S&P, probably if anything looks a little more vulnerable to a pullback, perhaps.
Yeah, and I think that we've had a pretty good bounce back as well. So that in itself is just kind of like we are, I think, approaching, if not already there, correction territory. We've got some poll results out. I've been told by producer Phil. What's the next positive news for the S&P? It's interesting to note.
That's gonna make Rich really angry.
Well, yeah, only time will tell. 29% trade deals, 25% Fed, and 12% inflation and job data. What do you think, Scotty?
I certainly can't argue. I certainly know. I wonder if Rich, stating the fact that if only time will tell wins again, he'd get upset if there's a bit of tactical voting there, just to annoy Rich. But yeah, I mean, I think with the balance of the probabilities, I mean, inflation data at the moment is actually getting quite boring.
Yeah.
It's a focus, but the soft data has improved, but the hard data's coming through pretty good. Jobs data again is holding in. I think if one of those, I think of the two, the bigger risk is perhaps if job data were to start to soften again and weaken, because we saw earlier on about that inflation for the common man and those kind of numbers. You know, suddenly if there's more layoffs, I think out of those two. But yeah, Fed. I mean, the Fed's not going to be moved. Yeah, that's right, Kieran. I think boredom is the narrative.
It is, a bit
That's
meh.
what I said to Rich, never short a dull tape. But yeah, I mean, the trade deals, if anything, you could argue, could they get worse rather than better?
I think they
at the
could.
margin?
I think they could. And the one thing that I was looking at yesterday, and Rich can tell you this too, because earlier in the week he asked me where because I've worked at Bloomberg, I've worked at Reuters, CNN, and traveled the world with them, covering these things. There are only a few places they can meet in London that have secure
I see what you're
back
saying, yeah.
entrances and secure meeting rooms, right? And they're never going to want to stay too far from Chinatown because the Chinese like good food. Okay, so it's not going to go anywhere else. So Lancaster was where they met. But the key thing from yesterday, Scotty, was that after the communique from the Americans, the Chinese were quiet for several hours.
Yes.
And this tells you that they're not going to sit back and take, like you rightly said before the show, is it 55%? That's the figure now, right?
That's from like a month ago or something.
Yeah. It's still high, right? It's still high. And the current consensus, especially the mood music from Asia, is that they are not going to take this, just take it.
No, look, and they can be very patient as well, as they've shown. I mean, sat there and watched their economy effectively tumble for 2 years, and then the central bankers acted. I think you can see from history that the Chinese don't do things in haste.
No.
Whereas that's about the opposite of the Donald.
Yeah.
I think the thing about the Fed, though, the component is, and to be fair to Jay Powell, when you remember at the March FOMC press conference, he basically said survey data is a load of rubbish. So the softer stuff like Michigan sentiment and so on. And when you look how that's pulled back, he said, we're going to focus on the hard data. And to be fair to him, it's actually played out
It has.
pretty well. So he has to be applauded for that.
Yeah, it is. Yeah.
I mean, even I think Trump said yesterday he wants a full percentage point cut after the CPI.
Did he also say he wanted, is it to a point, was it Besant or someone as...
There's a lot of levers getting pulled in the White House, and the problem is the sound bites are quite hard to sift through, and you'd be far better at that than me from your experience in
it's called
in
flood
these
washing,
things.
darling. Flood washing. Have you heard that
Flood
term?
washing? No, I haven't.
So you literally flood the market on Twitter, on X, they call it these days, on media, on social media, with so much conflicting news. And then you actually keep the Reuters and the APs out of the briefings, but you flood the market. So no one knows what you actually want to do when you sneak it out.
That's fascinating. Flood washing, you say, yeah?
Yeah. It's only used sort of internally within sort of the media spaces.
Yeah, sure.
When, normally when you have, let's say you go to an earnings announcement, for example, the corporate version of that, Scotty, is when, when they have all the good news and then you wait until 45 minutes in and then bang, that's when they announce what's actually going to move the shares, right?
Interesting. Yes, absolutely.
You just flood wash the beginning with all sorts of, data points that will just give a mixed reaction.
Yeah, that makes perfect sense.
We got to wrap soon, but very quickly, just wanted to ask you for your view on, have you got a end of year projection for the S&P 500?
Crikey.
And I'm putting you on the spot here, but we have a poll at the moment.
I think at a push, with the information we've got now, I think probably 6,400. something like that.
400.
So that'd be up what? It's only about 3-4% on the year. Is that right? Or 5% on the year? So yeah, because I think that this is just dragging on. And look, sometimes you almost need a slow year after the fast start we've had. You almost need a slow year to make people realise you can't just expect a 25% return every year.
Yeah, right. Yeah.
But again, I mean, if corporate reporting maintains and margins are the same, I could certainly see it higher without a doubt.
Cool. And on that note, please stay where you are. Go and get your cup of coffee, get your toast, right? We've got Jolie coming up because we're going to be talking about space investment. So stay right there. Thanks, Scotty.
Thank you.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
There are certain things in our daily lives that everyone has a view on, like your favourite clothing brands, supermarkets, or even which airlines to fly with. Maybe you're loyal to EasyJet and you think British Airways seats are too expensive. Or you'll never shop at Tesco's again because Marks & Spencer's food offering has won you over. Now, what if you could use these views to try and spot opportunities in the markets? Let's talk about pair trading. It's a way to trade that focuses on the share price relationship between two similar stocks rather than taking a view on the market as a whole. Here's how it works. Take Nike and Adidas, for example. Now, some people think that Nike has gone out of fashion recently, but maybe you believe in a brand recovery over the medium term. On the other hand, Adidas Samba and Spezial shoes have been incredibly popular recently. But have sales peaked with this trend? As a trader, you could go long on Nike, expecting its share price to rebound over the coming months. Also, alongside that, you could go short on Adidas, expecting it to cool off after its big run in the last 12 months. It all depends on how you would like to express your own personal view on two companies. But keep in mind how quickly trends can shift. Remember when Under Armour rose to popularity fast, along with its share price. But then they spent most of their profits on celebrity partnerships and their share price performance flopped. Now, this doesn't just apply to clothing brands. Think of Tesco's and Sainsbury's in the supermarket space. Two companies that often move together. Now, if one outperforms the other unexpectedly, pair trading could let you capitalize on what could be a short-term difference. Because the beauty of pair trading is that it's market neutral. If the whole market drops, as long as the gap between your chosen pair narrows, you could still see an opportunity. But don't forget, always research why prices are diverging so you're not caught out by unexpected trends or their financial results. Do you want to give pair trading a try? Start simple. Test it out on a demo account first. It's a great way to learn the strategy without taking on real risk. And on IG's platform, you can explore similar trades easily with access to the tools that you need and further education on the IG Academy.
Hey, welcome back, trader friends, and we have the wonderful Jolie Ledzelter to join us to talk about space.
Good morning.
New frontier.
Yeah.
We know that a load of you trader friends are always so excited when we talk about SpaceX, in conjunction with Tesla, of course,
sure.
Monkey Man. See, got your back there. Also, RSACs asking about, have I seen Rocket Lab? And I'm like, yes, it's such a great company, really exciting stuff that they're doing. But also, I wanted to talk about Filtronic as well. But let's start with SpaceX first. Do you
Sure.
like the whole kind of space trading side of things, or do you think it's so far away?
I mean, nothing's out of the realm of possibility now. I mean, we've got NFTs, we've got crypto. I mean, it's the time for innovation in the financial markets, right?
Right, yeah.
So yeah, absolutely. I believe anything can take off right now, pun intended.
Shh. We need one of those producers, but we need a drum thing.
Yeah.
Now, where is it? There we are. There we are. So I made a special chart for this special segment with Jolie.
Sure.
I'm gonna whack this up. Here we go. SpaceX. So for those of you, it has launch services, the Falcon 9. I'm sure you've heard about the Dragon as well. I'm sure you heard, Musk saying that you need SpaceX if you want to get more of your astronauts. I can't do the accent, but in the future, SpaceX is seen as like the logistics, right? It's going to be like the trucking company.
Sure.
But also Starlink internet. It's got satellites, tons of subscribers. This global broadband coverage. And then the Starship program is, of course, I don't know whether you've seen the videos, but those reusable rockets.
Right. I haven't seen those videos. I'm definitely going to check them out after.
Yeah. What do you think of the revenue? Take a look at the revenue there in the outlook.
I mean, it's very strong. You don't see that kind of growth very often. It's pretty remarkable.
Yeah, and also the fact that we talk about this a lot here. It's about the outlook and what this will bring in the future, right? So I wanted to also give you some notes on the investment outlook. Why don't you take us through the bull case, the bear case scenario?
Sure. Bull case scenario. We're seeing Starship success. That's definitely apparent. Starlink dominance also looking very apparent. Mars mission timeline. That's a timeline, not like for certain. So, but yeah, that's bull. Something positive. Space tourism growth. That with the target of 3.1 by 2030. Not out of the realm of possibility, but we always got to play devil's advocate, right? So let's take a look at the bear case. Bear case, delays for the Starship, competition threats. Definitely, I don't think, Elon's the only guy out there with this idea. Regulatory challenges, absolutely. And then market volatility. Yeah, I mean, and that's the target by 1.7 T by 2030. So yeah, I mean, definitely interesting takes. Could go either way. Could be a combination of all of those. Yeah. Some pretty interesting analysis for sure.
Yeah, and it's also lots of people going, how do we trade this in? How we then trade this? So if you come back to me, there's no date yet. I have been getting all my contacts, asking them, in the tech space and space X, those who cover SpaceX. There's no definite date yet, but there's been talk of an IPO, right?
Sure. Yeah.
But no date yet. Elon Musk, of course, prefers to keep it private for now.
Right.
He wants to maintain control.
Sure. Yeah.
So.
And I remember when, he bought X and took that Twitter off the market as well. So as an investor, I'd be like, ooh, I don't know. Maybe I wouldn't want to get burned twice. Maybe I'd believe in him, but it's just an interesting thought,
Yeah. And if it does IPO, or maybe Starlink gets spun out, who knows? Investors and traders like you, they can then buy shares through, standard brokerage accounts, right?
Sure,
like us.
yeah.
But at the moment, there's no date yet. But if you Google and try and find out, how much of this is, baked in, or how much exposure can you get through Tesla, because that is a key case if you are bullish on SpaceX to buy Tesla, because a lot of that is on the expectation that SpaceX will do well. I think Luke Moore and I, we were crunching these numbers and trying to find it yesterday as we were waiting on the CPI. You'd be surprised. It's like 10-20% of the Tesla share price is to do with the EVs. All the rest is to do with SpaceX and Starlink and the expectation
Sure, yeah.
that all this innovation is going to come good.
Right.
So speaking of that, let's take a look at Filtronic. So I'm going to put this up
Absolutely.
on the screen. It's going to take some time. So take us through Filtronic.
Oh yeah. Well, we've got the RF components, the microwave technology. We've got the space and satellite as well. So kind of comparable to what we just discussed. And then we've got the defense and 5G, so mission critical communications, telecom infrastructure, kind of in the same realm as last company we talked about a little bit. There's some crossover for sure.
And I'm glad you said that because they have announced recently this partnership, right? Which a lot of analysts watching this space have said it's a total game changer. So the Filtronic and SpaceX have announced a strategic partnership. And also the expectation is that there will be follow-on contracts. The stock performance, I mean, wow, look at that. Year to date, we crunched some numbers for you. This is over the year so far. That's up 88%, outperformed the FTSE by 106% there. Really bullish. So the investment thesis, the bull case is that the partnership with SpaceX grows. We see the Starlink expansion, defense spending grows as well, which will give support. And the bear case, because nothing is 100%. We have more competition to Filtronic, or it relies too much on SpaceX, and that doesn't come good. Everything in the tech sector also comes in cycles. If you bring that down, I'll show you the chart. So everything happens in cycles. So I'm just going to quickly show you Filtronic on my chart here.
Yeah, let's take a look.
So have a look at this.
Sure thing.
This is the daily chart here for you. Now, as you can see here, it has had a really, really strong run. And some of the support seen recently down to that SpaceX partnership. But we are also taking a look here. I put up the moving averages because this stock, this is the daily chart here, has been healthily above the 20, the 50, and the 100-day moving average, which is bullish. Also, what's interesting too is that if you look at the green candles, we talk about this quite often, since the lows, since early April, you've seen more green candles than red candles.
Right, yeah.
This implies that there has been the bulls are more in control. So if you wanted to use technical analysis and you had if you had a bullish case scenario for this stock and you think that, things are going to go well now that it's got this partnership under its belt, then you might want to consider buying at around levels seen, was the swing low would be 9th of June. And you want to enter around these levels, but bear in mind to have your resistance in mind here, which is that swing low during June. So maybe put a stop somewhere below there. But really, if you have a bullish scenario and just looking back here, it's look at this chart. It's just hitting record highs. Going to the monthly chart there and also the weekly chart. Obviously, it's had that really, really tough period, but it looks like it's come through, right, on the weekly chart and is now zooming higher, pardon the pun. But you want to kind of set profit targets near around sort of maybe look at the ATR. And what's interesting about this chart as well is that you could potentially see another 2% to 5% move there if things between SpaceX and it grows. It was also looking quite good on the RSI side. I mean, it is just crossing over into overbought territory, but not by much. So perhaps more upside to come if we get more news of contracts. What do you think?
I mean, it does look like some steady growth over time is what we're seeing. And then you're spot on with the candles and the bulls being in charge. So yeah, it doesn't look like it's really hit a ceiling just yet. So definitely an interesting company to follow along with. In terms of options, doesn't look like this one is traded on the U.S. markets for options just yet, or stock. But if it was, for example, a couple things you could do. You mentioned the stop at a certain price. Something like comparable to that would be like if you wanted to protect your stock, for example, at a certain price, you could, if you were a conservative trader, buy a put option at that strike of where your stop is at, if you're willing to accept that price. Or conversely, if you're a riskier trader and wanted to do a short strategy, because we know that short strategies have a higher probability of profit, you could sell a call option at that strike as well. And that way you have premium coming in. And if you were willing to sell at that price, if it was in the money, could get called away from you.
Nice, nice. So, yeah, protecting yourself on either side, really.
Yeah.
So, Rocket Lab. Let's have a look at this one because I think this is one that RSAX likes as well. This is a really cool company. It has launch services. I like looking at this when I'm thinking about payloads, right?
Sure.
How are we going to get all that stuff up to, I'm sure there's already a Walmart on the moon.
Yeah.
The moon's meant to be our warehouse or warehouse stop and refueling.
Yeah.
In fact, we need to get Piers on again. Piers from Macor, a brokerage as well, because he's got an interesting thesis and strategy that combines why Tesla and the whole Starlink and the Mars exploration all ties in with defense as well, because his idea is that there is going to be a movable Iron Dome.
Ooh.
So you know the Iron Dome that Israel have, right? The thing is, there's always been, you know, conversations around, you know, how can a company sell Iron Domes but have an Iron Dome that is movable? That you can, you know, say to India, well, you feel like under threat. Well, we can sell it to you and put it on right now.
Yeah.
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 And then if you don't need it, hostilities have come back and eased off. We'll turn it off. Right.
Yeah.
So it's almost like a pay as you go.
Right. Yeah. That is interesting. I never considered that before.
Yeah, and with
Kind of reminds me of a modern day like moat.
yeah
In the Renaissance world.
the
Yeah.
air people.
Yeah. Right.
So back to Rocket Lab. This is another one that has had incredible performance. Crunch some numbers there for you. And some of the catalysts, you know, that we are looking at, Neutron launch there. You know, this is expected sometime soon, actually. We are now looking out for more details on competition as well, because at the moment, SpaceX dominates, right? With more than 80% market share. Take us through the bull case and the bear case.
Absolutely, yeah. Bull case, so optimist here. It is the Neutron launch success. They've also got the NSSL contract wins, space systems growth, satellite constellation boom. So lots to look forward to. Devil's advocate, bear case. Okay, we got Neutron launch delays, SpaceX competition, high value risk, and execution challenges. So yeah, I mean, definitely could go either way.
Yeah, so let's come off that and I'll whack my chart up. Producer Phil, here we are. Any questions so far, young Padawans? Luke Moore saying, never let the truth get in the way. Luke gave you a call out yesterday on Filtronic. Thanks for showing that to me because we're talking about that now. Also, we are coming up to all sessions soon, so don't forget about that. Jugger, morning to you. R600, there you go. R600 saying, yes, I do. Rocket Lab there. So let's have a look. Trying to come out of this right now. See, Producer Phil, the F9, F11 gets It is time to go, but it's getting stuck here. Well, we have to go right now because I'm being told that we're running up to the. I know. Time flies when you're having fun.
Really?
We'll catch up later. Any questions for Jolie and how to trade these stocks on an options strategy? Just slam them on ask@ig.com and I'll get it in front of her. Or slam the like and subscribe button if you haven't already, because I know lots of people. Yeah, slam right now. Don't be a freeloader.
Yeah.
Do not be a freeloader. Slam the like and subscribe button right now and put your comments here and I'll get them to Jolie. Thank you so much.
Thank you.
Bring me the next shiny new thing. Bring me the next shiny new thing.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, look, a lot of financial advertising can be quite dry, a little bit kind of wallpapery. And I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they're doing.
So my work is colorful, it's poppy, it's quite surreal, and I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach, and I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There were too many people to name who've worked on this project. You know, at IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Hey, trader friends, welcome back. And we have Jack coming from the trading floor. Hey, Jack, how are you?
Morning, Ange. Not too bad, how are you?
Yeah, good. It's been some time. I hear that you've been let down by someone. Otherwise, you'd be here in the hot seat next to me.
Yeah, I was going to come in today, but I think I've messed up the shifts a little bit, so it's just me. I've got someone helping out, but I need to kind of keep on top of things. And it just seems to be heating up, actually, after a few weeks of it being quite quiet. So I've timed it well, I think.
Yeah. We talked about this kind of like, a bit meh at the moment. Market's a bit meh. And I was next to Luke yesterday watching the CPI reaction too. And have to say it was not as exciting as April, shall we say, which is actually not a bad thing sometimes. But let's take a look at stock market, volatility, compared to recent months. And, we're on the volatility curve, short term versus long term, option maturities. Where is this implied volatility currently highest and lowest?
Well, I made a few points to talk about last night as we were sort of waiting for this morning, and it seemed like the short end of the curve, so the sort of really close to maturity options, the monthly options for June, the weeklies, the Wednesday, Friday contracts that we have, these were all really, really low. And you could see it on even the VIX. You'd see we're, I think, 17.5 on the front month. And then as you got further out, we're climbing 3 points in the space of 3 months, basically. So the vol was definitely higher on those longer terms. I think it was probably a 2.5, 3 week period of being essentially on the floor. Not a lot was happening. Even some of the figures that we were expecting, CPI yesterday gathered nowhere near the vol it normally does. I guess the figure itself is sort of being left on the side of the road. But still, it's very interesting to see. Those were the notes from yesterday. This morning, however, it's completely changed. So yesterday evening, sort of 7 o'clock, 7:30, it started to pick up a little bit. And now from the open in Europe, it's completely reversed. The front end of the curve's jumped right back up. It's a lot more sensitive to changes here. So a change in vol is going to impact that front end of the curve a lot more than it would the back end of the curve. But still, yeah, we're seeing a lot more of a premium, particularly on the DAX. That's been the one this morning that's climbed up significantly. I think we've come off quite aggressively this morning.
Speaking of the DAX, so just bear with me a moment because we have all sessions now out of the gate. So I'm just going to quickly take you through my all sessions watch list here. And we have Oracle all sessions up more than 8% there, top of the winners list. We also have Novavax and the Novo Nordisk up 1% there. But also looking at some of the other names, Barrick Mining, we've got John Mayer from SP Angel coming up right after this. So if you've got exposure to mining stocks or the commodities space, make sure you tune in for that and slam your questions here. Taking a look across to the losers list, we are pretty much looking like risk on at the moment for the all sessions. Soundhound down 0.5% there. NEO down 1.6% after earlier in the week, making some gains as well. We'll talk about why tin is hot a bit later on, and that's partly to do with the EV space. And we've seen this theme gathering steam. A lot of the consumer names having not a very good ride at the moment. Pinduoduo or PDD down 1.3%. And Affirm Holdings also down 1.5%. I think some of you heard me say this as well in the last few months, that because consumer spending and consumption in general starting to really suffer, and we're seeing that starting to come through. Please take off your exposure to the buy now, pay later, because those kind of stocks like the Klarnas, they might benefit in the short term initially, but when push comes to shove, when people are really starting to pinch pennies or tighten the coffers, then we're going to see those stocks being vulnerable as well. Right, Jack, back to the options market. We talked about that CPI figure as well. And do you think this is, in a way, looking at how volatility is moving away of markets saying that, it's really just looking at hard data right now. It's not paying much attention to the trade sort of situation or really the Trump and Musk tit for tat?
Yeah, I think CPI for the last couple of years has been a huge figure, but it's because of the implications that figure's had, I think. So the Fed, we're looking at CPI, the PCE index, all of these inflation statistics and making decisions based on those. But because we're looking backwards with that data, I don't think it's now going to impact the Fed's decision making as much. You heard Powell consistently come out now and say, we don't know the scope of outcomes in the economy, so we're going to have to wait and see. I think CPI in the next time round and maybe the time after that might become more interesting if we see an actual impact from the tariff, or the tariff period, basically, and whether that's fed through. That might have a little bit more impact, but I think we're too early for that at the moment. So not as much impact as it used to have. Yeah, and also I think the spotlight has slightly changed away from inflation now. It's much more focused on tariffs and geopolitics, I guess.
Yeah, and I expect the next sort of crunch point to come actually from the Chinese, when they actually respond and, you know, say whether they're going to take that, you know, so-called agreement that was put out late afternoon yesterday, I think is when it broke. No consensus just yet, because both sides have to go back to their respective presidents, right, to kind of say, what do you think of this?
I think Trump's on board, isn't he?
Well, you never know.
I think he might be the easier party to get on board.
Yeah, you never know with the Donald. You never know. Crude. Let's take a look very quickly. Crude. Just whacking that up. This is the last one that we're going to look at here. Putting up WTI there, because we did see, this is the weekly chart. Let me just put that up so it's a bit clearer for you. And currently down 1% there. We saw, you know, big moves yesterday. Look at that. I'm going to steal a quote from Dylan Rattigan. Cuckoo bananas move up 4.3%. Yesterday. What's volatility showing us now? Is it still ramping up or slipping?
It's starting to come back down this morning, but overall still quite high. Yesterday was just ridiculous. I think if you pull it up onto a daily chart, you'll see that a lot of that move has come in the space of yesterday. Up, I think 3 or 4%. I can't remember.
Yeah, it was about 4%.
It might have even been 5% now. But yeah, coming off the reaction from America partially evacuating embassies and sort of non-essential personnel from Iran, not a good sign when you've already got increasing tensions. So I think that's fed into it quite a lot. But then the last time we were on, there was also stories of weaker demand that should hopefully be fading away with the US-China deal. Also, just sort of, I think, was it last week we had the inventories figure? So
yeah,
is that going against it actually?
Well, the inventories fell by I think it was around 3.5 million barrels last week, if I'm right. I think it was around 3.5, and that was slightly more than expected. 3.5 million was was sort of the figure that we were looking at, but we are seeing this kind of go, you know, against the grain slightly. I think it's all baked into that geopolitical uncertainty.
Yeah, definitely, and there'll be a premium because of that. And I think yesterday's move will be primarily down to that. The vol that you were mentioning, that has been just outrageous. The skew that we normally see on crude is that you'd sort of say a negative skew on the tops, on the upside. So as you go higher, that volatility should drop down. And then on the downside, it usually works the other way. So it'll get higher as you move further down the curve. That's the typical profile we expect. Yesterday completely blew that out of the water. We're now climbing in volatility as you go higher, and it's actually reversed the downside skew. So if I look now in August, I think we were mentioning this. If I do 110 call for August, it's 15 bid in the market. It's that tail has just gone crazy on the top side. So now, if you don't expect oil to rise up to some crazy levels over the next month or two, obviously there's now a premium on that top side because of any geopolitical risk. Might be an opportunity there for sort of getting a little bit of premium, but just watch out if you're trying to back a move to that top side, because it's now got a lot more expensive after yesterday.
Nice. All right, time to go. Thank you very much, Jack. That was brilliant analysis there for those of you trading WTI on the options front. We are going to have a special surprise for you right after this, so don't go away. Producer Phil is going to fill you in on who's coming up next.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees, with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
Welcome back to Trade Live with IG. So, our next guest has mastered the art of making social media real, relatable, seriously impactful, and gives financial insights into mindset gems. Gabriel Nussbaum, how are you doing, sir?
I'm doing well. I'm very excited to be here today.
It is really good to have you in. This is a big jump for us. Because I think TikTok, you have 1.3 million followers.
That is correct, yes.
Does that just blow your mind every morning?
I try and ignore it as much as possible because it's probably more of a scary thing than an exciting thing every day to know that many people are watching and listening to things that I say about money.
Absolutely. And so it's taken you to the Bank of England. Mm-hmm. It's taken you to 10 Downing Street. Mm-hmm. Has there been a moment along the journey where there was a real, you can say, whoa, this is when it changed forever?
There's been a lot of moments along the journey that are incredibly memorable. I suppose your first viral moment on the internet is one to remember.
What was that?
My first viral moment was talking about lifetime ISAs. Quite a nice, relevant topic, something that I think needs a little bit of a change, and maybe we can dive into that. But that was the first moment that I think a lot of people learnt about the ISA product, probably through social media on TikTok. It wasn't a platform built for education, but it's a platform that I've used education for. So that was a big moment. And then I guess first hate comments, being called Wallace from Wallace and Gromit. That was a lovely moment.
Where did they get that from?
I don't know. No idea. And And then probably a handshake with Keir Starmer is a pretty memorable one as well. I mean, some people might hate.
Bad?
I'll leave that to everyone watching.
But really, it's amazing how, tell us how it first started, because where you are now, the actual story of how everything started is really interesting.
Yeah, so I was working at Barclays on a graduate scheme, commercial banking, so really nothing to do with the world of personal finance. I'm not sure there are many careers that are very similar to the world of personal finance. And I, just as a weird guy, thought it would be fun to start a hobby creating financial education on the internet, because it was a topic I was passionate about. I was teaching in my own little circles. It was the thing I was reading about. And everything I know is self-taught. There's no qualifications behind it, which some people might be like, oh, okay, let's not watch this guy anymore. But for me, that adds an element of trust and authenticity behind my journey, because I'm not telling anyone what to do. I'm just teaching as I go. So yeah, I was building this up side by side while starting a career for myself. And very quickly, one overtook the other in terms of what I really wanted to do for the rest of my life. And that was to become a financial educator.
Yeah. And so how long ago was that then, when were you at Barclays?
So we're talking almost 5 years ago to the day I started. COVID, a classic COVID one. I started my career during COVID, which means I didn't meet an employee for about a year, another employee.
Wow. So yeah, you can understand why you ended up, going down the online route then.
Talking to myself and going crazy on the internet. Yeah, absolutely makes sense.
You touch on that. Your videos they go so popular and viral, because it's you speaking to yourself, and it's almost like good cop, bad cop, devil on one shoulder, angel on the other. And I think that's what's so compelling about watching, because everybody's having these discussions to themselves anyway.
Yeah, it would be great, honestly, if I could bring in another human being into my studio and have a conversation with them. But until I have hired that person, I create these conversations, like you said, between two characters often. I just think it's a really engaging way to have like that look over my shoulder approach to personal finance. You have one character questioning something or not aware of a topic, and the other character can either explain it or challenge it. And this kind of dialogue does a really nice job of both giving you an end result, a lesson at the end of the day. But on top of that, it adds the entertainment value, which is really important when you're trying to teach, especially a younger generation, which my demographic are, which is normally 18 to 30-year-olds.
Okay.
You kind of need to trick them into learning a little bit. So that's why I add the entertainment into it as well.
Yeah. And then you share a lot of yourself personally, because it is that real situation. We spoke about rent the other day. Oh, well, but how do you balance that sort of vulnerability, but then also have the boundaries as well?
It's tricky. It's something that I'm learning every day. I've definitely overshared a lot about my own personal finance, whereas I suppose, opposite of that, which I also believe in, is that I like oversharing. I think that personal finance is a topic we all know it's not taught enough in any level of education.
That's it.
But on top of that, the conversations in this country in particular are so limited. It's so taboo. If you look at like levels of different topics of conversations that people are comfortable having or not comfortable having, money quite often tops that list as the most uncomfortable topic. So even though I know logically that I want to be as open as possible and be able to share anything and everything, it doesn't mean that I haven't still grown up inside of a society that closes that down. So I'm caught in that kind of two minds and two different personalities.
Yeah, but it is becoming much more the way, isn't it? We know that Mia shares her running total of her investment portfolio. Yes. Laura's got a target that she really strides towards. So I do think it's becoming more common. And how is that received? Because you do these, is it Vox Pops they're called?
Yeah, I mean, it's received brilliantly, because at the end of the day, people are so nosy. Like, they love knowing actual numbers behind what's going on.
Yeah.
So I do try and share as much of it as possible, because at the end of the day, even just sharing, a salary that you're currently earning, or you did earn a period of your life, which is often a question that you said with the Vox Pops that I ask people to try and share.
Yeah.
If you're sharing a savings amount that you've got stored away, if you're sharing a goal that you're trying to hit, when you put numbers to a topic, it starts to make things a bit more realistic, because someone else can start to see, okay, I didn't realize that, the threshold was actually quite lower than I thought, or I'm actually a bit further away than I thought. I need to maybe ramp things up a little bit. But until you bring actual numbers into it, it's very hard. So when I speak to people in the street and I push them to try and give me some numbers behind the information they're sharing with me. So like, for example, a salary, it's a 50-50 uptake whether people are comfortable sharing it or not. But I think once they do, like the engagement shoots up because people are like, I didn't realize that you could earn that much in that kind of career, or that's the average salary in the UK, or someone is surviving in London earning less than 40k. How is that even possible?
I had that conversation with a young lady who was starting out in a estate agency, and I think her salary was 23,000. And I made the mistake of asking, God, how do you survive on that in London? And it was a genuine question. It didn't go down well.
No. it doesn't go down well at all. But the reason why I put that 40k number in a second ago was because when I asked most people how much do you think you need to live in London, the responses are probably start from 70 and go upwards for a single person. And I'm talking a comfortable lifestyle, of course.
That's it.
But there are numerous occasions where someone says, yeah, I'm in the mid-20s, late 20s, early 30s in terms of my salary, and this is how I do it. And to hear the start to like practical solutions and like things that they're doing to solve it doesn't mean it's easy.
No.
But it's a great eye-opener for someone that does strive to maybe move to this area of the country.
And, people generally, do you find they're striving towards investing, towards the, you help a lot of people with their ISA understanding. Is investing the goal, or are we still way off?
Investing is becoming a lot more popular. It really is, especially in young age groups. The biggest issue right now is misinformation with investing. So I think there's huge research to show that the 18 to 30 is one of the biggest ever age ranges in terms of what percentage of them are currently investing in some way, shape or form.
Yeah.
But that doesn't mean they're necessarily putting it in the right place, because the internet is flooded with misinformation. You also ask them, where are they getting that information to learn about this topic? And the answer most commonly is the internet, social media, maybe through people like myself. So whilst, yes, it is becoming hugely more popular, which I'm a huge advocate for, so are the government, with a lot of plans that they're trying to do and stuff like that, whether they work or not is another topic of conversation. And I think overall it is a good thing. The biggest issue right now is lack of access to accurate and positive information, rather than people that are trying to take advantage of this young, maybe slightly naive age group that don't have the right intentions or aren't aware of what certain tools and products should be used for.
Yeah, I mean, not to put it out there, but the Dubai crew, we've all seen the Lamborghinis and the high living, and that's the stuff that's, it's so good to see people like yourself and the ladies that I mentioned coming through, and really from a genuine educational view. That has taken you to speak to the government and the Bank of England. What kind of conversations go on at that level?
I think it's an education play still for them. Both of those organisations are obviously historical organisations. Bank of England, one of the oldest institutes in the country. The government. But they're both having this play where they realise they cannot access the young generation anymore. They are really struggling through their traditional, I suppose, assets and media. And they look at us as the new wave of being able to communicate things to, again, this younger generation.
The masses.
To the masses, exactly. I suppose the important part for us as people who have that level of authority or maybe influence on the audience that are watching us is that we're not there to be mouthpieces. We're there to digest information they're sharing with us and then translate it in our own language with our own opinions attached to it.
Absolutely.
Because I think the issue that you see with a lot of mainstream media is that they will repeat word for word, verbatim, what is being said. Now, they're doing that not because they're puppets or anything like that. That's their job, right? To report, to say what happened. But if you're watching that as an everyday person, you're probably thinking, I've got no idea what that means. I've got no idea. You're still using technical language on the news. Whereas I will come in and say, an ISA is, and actually explain what an ISA product is before I then go in to explain the changes that have been made to it. And automatically that switches someone on. So I think that if we look at the percentage again of people that are probably now aware of what an ISA product is for the first time, this is the change that we're trying to make. And I think that's what the government and the Bank of England have latched onto. They are aware that this is the change that needs to take place, because ultimately it's where the attention is.
Yeah, and it's that really nice path into investing, right? The stocks and shares ISA is just, it's such a a nice first step, right? Don't open a stocks and shares account. Don't open a trading account until you've got that level of confidence. But that can really start with the ISA, can't it?
The ISA product is amazing. Not quite sure why it's being tinkered with at the moment, or potentially tinkered with.
Well, that's interesting, isn't it? Because it's, from my point of view, what's the point in a cash ISA, right? Because investing has outperformed by so much, but it really needs people like yourself to help educate the nation on what's safe, what's not.
Well, it's exactly what you said. It's an education play. Whereas I think that the current rumours about the reduction of the allowance for the cash ISA isn't an education play. It's kind of like a force play. Yeah. And I don't think you change a nation's habits through rule changes. You change it through education. So if I'm someone that's saving through the cash ISA product, whether we think there's a use for it or not a use for it, let's say that someone is using it regardless, and they get told all of a sudden that they can't put in above a certain amount into that. I understand the logic. Don't get me wrong. I really do understand the logic, because you're shifting people. Maybe they're looking, okay, what other ISA products are. But I think psychologically, if I've got no information or education on an investing product, what I'm going to do is I'm going to shift my savings into non-tax incentivized saving accounts. And the government, okay, sure, they will raise more tax through that, because people will start to go over, the tax saving thresholds. But will you see this huge shift into the world of investing? I'm really not so sure. I think it's an education play, and it's a change in the language that's used around investing products within this country. Currently, whenever you talk about it, and again, I understand why, but it's capital at risk. Your
scary 3 words.
Your capital might go down as well as up. Risk, warning, risk, warning. Yeah. And I do appreciate why that is, because all of those statements hold true. It just doesn't do any favors to someone who's thinking, oh, maybe I'll get into it. Oh, they see that risk. You know what? Like, I don't want to take any risks. Whereas if you start to explain how to mitigate risk or reduce risk, that is a much more, I think, appropriate way to shift people over into this new world of investing.
I guess it is part of the responsibility of the companies as well, isn't it? It's saying, right, we realise that you might not have the availability of the cash ISA anymore, or greatly reduced. But if you open the stocks and shares ISA, we'll pay you the interest rate that you would have got on the cash ISA anyway. So the fact that companies are moving towards that at least softens the blow. But do you have conversations with the FCA around, but I guess they're more the regulator rather than the educator.
They are definitely the regulator, and I think they are currently working with big institutions to help, in a way, push towards the world of investing. I mean, investing has been democratized like crazy over the past decade.
Wow.
And so I think that's why there's this huge play for everyday people that can get into investing. It's not like you need to call up your broker anymore and put in an order, right? You can click on a few buttons and you've invested in any company or any fund in the world at some of the cheapest prices.
Yeah.
So the FCA are making, I think they are definitely working this behind the background. But in terms of working with someone like myself, I mean, you see last week, the report going out about a couple of arrests in the UK on influencers,
right?
A huge number, dozens and dozens of cease and desist letters going out. And I think what they're targeting are what you call the Dubai people.
Yeah.
The people that are being flashy, trying to push people into high-risk products with very little warning and stuff like that.
Okay.
So the FCA are definitely focused more on that area of the social media world, which is good. Obviously, it's great to get bad people off the internet. What I really want, and what I'm really pushing for, is to open up conversations with this new wave of, I suppose, good players in the game, people that are really trying to impact and make a difference. And often when you do hear them talk about us, it's in a very short sentence, and they lump us in with financial advisors and qualified people. But there are this new era on social media of journalists, essentially.
Yep.
Think about someone like Martin Lewis, not a qualified financial advisor in any way, shape, or form, a financial journalist, and we're kind of in the same bracket. But I think there's that gap there. The conversation hasn't really been open between the FCA and this kind of new wave of people on social media. Yeah. And I think it would be a really useful conversation because I think we both have the same intentions.
That's it.
But we need to support each other rather than whilst keep going after the bad people, but lift up the good.
You need the clarity on where the line is.
Yeah, I mean, there's a lot of guidelines out there, and I get nowhere near to the line. I intentionally have been trained on that. I know how to do that a little bit. But there are new people that are starting up that have real good intentions that need to be taught that from the start. And I think, there's a lot of things that need to be done over, I suppose, the next couple of years because the landscape is changing so quickly.
Now, let's go back to the sort of technicalities.
Okay,
so where does the idea? Let's take an investment.
Mm-hmm.
Where do you get that idea from, and then how quickly does it become a video?
My ideas come from all different places. So I'm keeping an eye on the economy the whole time, little changes that I can share. Hot and trending topics often come into play, and I will try and latch an idea. But a lot of the concepts that I make come from my own real life experiences, because I'm constantly interacting with money on a hourly, secondly basis. So a lot of these things, like from interactions with my friends, conversations with my partner, all that area hugely influences what I'm doing. Whenever I look at my investing portfolio and I make a decision or something like that, I will immediately go, well, how can I teach that within a lesson? So if we're talking about specifically investing, you get around the April area, ISA allowance, renews and all that kind of stuff. And it's a brilliant time to go out and create content about, well, how to invest from scratch again, how to, your ISA allowance is renewing, that element of urgency, but not really urgency or panic or anything like that. It's when people are getting more interested. Around the January area where people start to set New Year's resolutions. And they start to think, okay, you know what? This is the year that I start investing. Again, it's a great period of time in my head where I'm like, okay, I'm resetting all of my things a little bit, my financial goals, my budgets, etc. Let me create content around that. And that's the investing side of things, I suppose, or whenever I get a question from my audience, because there's huge interaction. Social media isn't a one-way conversation, it's a two-way conversation.
How do you keep up with all the comments?
I don't.
It must be impossible.
I really don't. But when there's a good one, it will come through, and I will often try and respond to that comment in the most appropriate way possible. So I'm trying to think of an example. Often I'll get asked, well, what platform do you want to invest on? And my response quite often is, just start. Literally, just start. I think people overthink a lot of this stuff.
Because it can be quite intimidating.
Yeah, because when someone asks that question, the comments start to go with floods of different names. Start here, this reason, that reason, that reason. And so many platforms are suitable for so many different people for different reasons. But I still think that it's better to get started on the wrong platform, theoretically, as long as, FCA approved, FSCS protected, all that kind of stuff. But to get started on the wrong platform than to have that kind of procrastination that stops you from getting started full stop. Because one of the best and quickest lessons I ever learned was putting some skin in the game is the quickest way to learn.
That's it, because you're focused and you really, you soon learn your lessons on a small amount.
It's exactly how I learned, right? Put something in, something that I was willing to completely lose. So I was aware of all of the risks around it. And it forced me to start learning. And I think that's probably done more for my education than any video course book that I've ever read.
There's a lot of our viewers, mums and dads, a lot of the kids are studying for exams right now. But if you were going to say, give one principle or one habit for a new beginner with even £100, what do you think is the best habit to adopt early?
Specifically with investing?
Yeah.
I think that one of the best habits is to just kind of start small. Because often people think there's a lot of reasons why people don't get into it. And one of the biggest ones is I don't earn enough or I don't have enough. But the truth is, like we said, the barriers to entry are being eroded so quickly that there isn't a huge amount that you need to start with anymore. So if I was to say to build one habit, one muscle, it's just to start small, start where you're comfortable with, and then adapt and learn from there. And then I suppose if you can allow me two, so I can do a bit of habit stacking.
Go on.
Is once you have started with that really small amount, something insignificant that you've kind of testing out to get the feel for it, bring in the education play. I don't care where you get it from. If it's a book that you want to start reading, if you want to start watching this show every single day, if you want to go on YouTube and just start watching your favorite content creator who's talking about the topic. I think if you just do one small thing once a week, 10 minutes of your time, we speak about compound interest in investing, right?
Yeah.
The compound interest in education stacks up in exactly the same way.
I've never heard that before. I like that a lot.
Everything in life compounds, right?
Yeah.
So the education play is just as strong as the investing play.
Right, let's. So, how do people find you if they have enjoyed this interview? And
I like that, a big if, right? If people have enjoyed it. If you hate me, feel free to find me, hunt me down, and let me know.
Right, I'm sure we got some comments in the. But there you go on the TikTok. So, as we said, that money guy, Gabriel. Nussbaum.
Yeah, Gabriel, that money guy. If you search that on all social media platforms, you'll find this beautiful non-Wallace looking face talking about finance in all ranges of topics and anything that interests me.
And so you must have been in early to get that title then.
Get that money guy.
Yeah.
Yeah. Someone said you should have gone with the money guy. It's too late now, isn't it?
No, like I think that's that money guy.
Well, that's where it came from. I was walking past someone and they were like, "Oh, you're that money guy on the internet, right?" And I was like, "That's got a ring."
Go on, to finish off, give us one of the funniest interactions you've had with a fan.
Oh, it's a fan or not a fan. I am horribly uncomfortable when people come up to me in the street, but I have to act very comfortable and all that kind of stuff. Yeah. But I think I was just on a plane going on holiday. And literally, like in front of me in the road, someone literally turns around and goes, "I really like your stuff." And I was like, "That's great." And then they proceed to sit next to me on a 4-hour flight. And I was just sitting there thinking they've come up to me, a stranger, saying they know me. Let's get the headphones in nice and quickly and just maybe pretend to fall asleep, because I was like, it's great when someone comes up to you and it's a quick 10-second interaction.
Yeah, of course.
4 hours is a little bit different.
Good stuff, right? Thank you so much. That's really been interesting stuff. And any big aspirations? So you've already done Keir Starmer. You've been there for Andrew Bailey.
Yeah.
What's the next?
What, DJT? The big DJT off in the US? Maybe I'll have a conversation with him one day. No, I think the goal for me would be if there was some level of formal education compulsory in the UK. None of this maths A-level enforced on kids until they're 18 or anything like that. Real financial education, starting from, I don't care what age, 5, 10, 15, 20 when you leave school and university. If I saw something compulsory going into people's lives in the next half decade, I think that would be one of the biggest successes that I think I can make. Basically make me irrelevant. I'm more than happy for that to happen.
So there we go. Shrimp Fred saying, "We'll point my daughter towards watching this guy because she doesn't listen to me." So that's a good start. Thank you so much for coming in. And we got Angeline on coming up next. Thank you very much. I am off for the week off tomorrow. Enjoy the weekend and we'll see you on the Discord. If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified. So be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Welcome to the exciting world of options trading. If you're looking to add a new dimension to your trading strategy, you're in the right place. Options trading offers unique benefits that can elevate your investing game. With options, you can protect your portfolio against market downturns, essentially creating an insurance policy for your investments. Now, what sets us apart is our commitment to your success. We provide extensive educational content to help you understand options trading inside and out. And with our 24-hour servicing, support is always just a call away. But that's not all. Options also allow you to generate income from your existing positions. Strategies like covered calls let you profit even when your stocks aren't making big moves. Options also shine when the market isn't following a clear direction, whether prices are rising, falling, or staying flat. There's always an option strategy you can use to potentially benefit. Now, we offer two ways to trade options: listed options for US shares, ETFs and futures, and over-the-counter options through spread bets and CFDs. Both types give you the ability to take various market positions. So, ready to explore the potential of options trading? Well, open an account today and take your first steps into this dynamic market. Remember, while options trading can be rewarding, it comes with risks. Always trade within your means and never risk more than you can afford to lose.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
Hey, trader friends, welcome back to the show, and I have a very special guest for you. It is John Mayer, partner and mining analyst at SP Angel. John, so good to see you. Welcome back.
Lovely to see you again, Angeline.
Lovely. John travels the world and is one of the top, if not the top mining analysts here in the UK and the world as well. Just give us an update on the recent trip that you had in Zambia. I've got a picture of your car here. Looking at it looks quite stuck, John. What happened there?
Yeah, no, that car is well and truly stuck, and the guy standing in front of it was the driver. He's an investor with a Swiss fund, but he looks after a lot of high net worths around Southern Africa, so he likes to come along for the ride. And we
is this your driving, John,
mines.
that meant you were mired in the mud there? Or were you just following GPS? Is that what was happening?
I was following Waze, and unfortunately Waze is brilliant, but there are some parts of Africa where Waze doesn't work so well, especially on really wet, muddy days. And actually, we discovered that Waze got us to where we wanted to go, but the guys at the mine had built this big earth wall, so we got stuck. Paul assured us that he was a great four-wheel drive driver. He'd done a course, and so we said, Paul, keep pushing through until we got stuck. That car is stuck between a tree and the earthen bank, and all the wheels were spinning, which is quite something for one of those pickups.
Yeah.
But when we climbed up the pile of mud that you see in the foreground, we were actually able to see the mine, and the mine manager was very good. He came round with a bulldozer, flattened some of the earthworks that they put in place to keep people like us out, and then he dragged it out. So it was all good, and we got to where we wanted to. We just couldn't do the last 100 yards.
So tell our viewers, John, which mine exactly you were going to see.
That was the Mimbula mine for a company called Moxico Resources. Now, look, I was lucky. I was a founder investor in Moxico. And 8 years later, I went back and they built the mine, and the copper is coming out, and it looks really good. And this is a company that is getting ready for IPO. And it will IPO next year. I mean, there is what we call a grey market in the shares, and if anyone's lucky enough to get some, that I wouldn't advise against it. Now, some would say I would say that because I'm an investor, but and a shareholder. But no, quite honestly, if you can get stock, and there is a salesman at Zeus who trades it. It's got to be the best copper company I've seen in London for many, many years. I built my career on Antofagasta and First Quantum Minerals and companies like that. And you know what? When you see one, you want to keep seeing it. So this is the second time I've been to site. And the team are just doing a wonderful job. And it's not just the one mine. They have a second mine in Zambia that they're putting into production. They've just made another discovery of high-grade copper at the Mimbula mine where we were. They've got a zinc project in Saudi Arabia. They've got some other very promising exploration. And when I say exploration, it's a bit beyond that, in Argentina and Nevada. And this is going to be one of the city's next great companies.
John, let's just take us through, and our viewer friends as well. Many of them that trade the Anglos, the Glencores, they're really keen on your expert opinion on, what are the signs, what are the things that you like to see, before you invest? I know that you've got, you do a lot of drilling prior to that. You take a lot of time, a lot of your time's looking at, drilling data. Talk us through what the key things are that make you think, whoa, this is actually a really good opportunity.
Well, it's different. It's different from large cap companies. So if you're looking at Anglos, BHP, Rio Tinto, that's more about sensitivity to commodity prices. So if you think the iron ore price is going up, you buy Rio Tinto and BHP. If you think it's going to be a great trading environment where a general suite of metals might rise, then Glencore is a better company. So that each company has a slightly different focus. And poor old Anglos has been dropping behind, but they've been cleaning up their portfolio, and now they're really focusing on being a copper company. And it's quite probable that BHP will come back and make a second offer to acquire Anglo. So there's a lot of potential within that suite of companies. When it comes to smaller companies, yes, drill results are the key. So we go
put
around
up this
looking at
picture that you sent me on drilling.
Yes, now that's from Prospect Resources in Zambia. So they're very close to Barrick Gold's Lumwana mine, which is huge. I mean, Barrick is going to spend a fortune expanding that mine, and it's been going for at least 10 years now. And so I sent this to you because it shows the amount of data and computational work that goes into analyzing what's in the ground. So each one of these lines represents a drill hole. The red and the green shows the types of mineralogy and the grades in the drilling. In fact, I forget exactly what this one's exactly showing, but it gives us an idea of where the copper is or where the gold is. And then we can look at that in 3D, so we can really start to piece together what's in the ground. I mean, it's a detective story, really, where you try and you get clues from the drilling, and then you have to put it all together. And in this case, there's a lot of drilling, so there's a lot of information that we can use. And following our site visit, First Quantum Minerals put, I think, another $15 million into the company. So Prospect Resources, it's ASX, so it's not UK, unfortunately.
Okay, cool. Putting up another photo. This is like Kavango. Is this what's above ground? Everyone's looking into this trench. Is that during the drilling?
So when you're running an exploration program, what you start off with is soil sampling, and trenches just give you a little bit more data. So it's very easy to dig these trenches. Important to fill them in again afterwards, of course. It's like having a horizontal drill hole at surface. Now, Kavango are operating in Zimbabwe. They got lots of clues because there are lots of artisanal miners in the area. In fact, the artisanal miners are really, really good. These guys are fantastic. You know, their health and safety might not be perfect, but their knowledge of the geology, their knowledge of what they're doing, the knowledge of mining is first class. And what Kavango are doing is following these guys and looking to formalize. They're working with the artisanals, they're formalizing what they're doing, and then they're going to build proper mines. And of course, that will really help on the health and safety side. It will mean the government can then get royalty payments and taxes, which they don't collect very easily from artisanal miners. And it means the whole thing will become a much better operation.
John, I get asked this very often as well. Like, you look at the data, the core data, the drilling, what you get back from, these initial trenches as well. 15, 20 years ago, covering Mines and Money and talking to people there was always this saying, this mantra that you don't really know what you're going to get until you blow a hole in the ground. In terms of the tech these days, the drilling technology, in terms of a percentage, how accurate is it?
These days, it's really accurate. It's within a few percentage points. Nature can always throw a surprise at you. So you've always got to expect the unexpected. But the computational power, as long as you do enough drilling, you will really know what you're getting into. You'll know what the ground conditions are. You'll know if there's any water there. You'll know if you know what you're walking into when you start mining underground or when you start mining an open pit. So I'd say a lot of the risk is taken out. And from an investment perspective, I also think a lot of the risk is gone because you have these very tight standards. Since the big Bre-X scandal back in the late 1990s, the way that the companies have to present their data and the professional analysis that is done on that really gives so much more confidence to people. So with the JORC resource numbers that we get out of JORC is an Australian code, there's quite a lot of economic analysis that is done before the resource figure is published. And that's really important because you know then that this isn't something that might look great but is completely uneconomic. You know that there has been a degree of economic rigor that has been put in place.
Fantastic. Oh, we got some viewer comments coming through right now. Andrew McKelvey, who's really into trading the space, saying, and has John got any views on Sarabi, especially the political risk with regards to licenses in Brazil?
Well, I went to see Sarabi many years ago. It's quite remote. I mean, it's not as remote as it used to be in that there is actually a road in there now. When I flew in on a single engine plane. And it's always been a good deposit. They mine high grade. Yes, it's in the middle of the Amazon rainforest, but there's always been quite a lot of artisanal mining going on in the region. So again, it's good that some of that is more formalized now because that'll be less polluting. But yeah, I'm not so worried about Brazil. I haven't seen people stealing licenses in the region. I mean, claim jumping can happen anywhere in the world, but it's pretty rare these days.
Just taking a look at Sarabi's daily price action there, and we are looking at potentially what could be the formation of a triple top there, although it hasn't quite materialized just yet. But Sarabi Gold, looking at the weekly chart, has been on a climb. It's been on a good upward trend since August 2023. Some of the comments coming through as well. Crazy Metal Detecting. Welcome to the show. The trouble is that, this is according to Crazy Metal Detecting, he says that, or she says, the trouble is that small cap mining exploration companies on the AIM market has been disastrous over the last 10 years. Comments to that, John?
Well, there's been an outflow of funds from mining in general, not just on AIM, but all over the world. And the problem is you can have a company that does brilliantly well. I mean, look at the Sarabi chart. The mining investment community have been very, very slow to buy up the gold stocks. There's still lots and lots of value in gold stocks. If you look at the very strong rise in gold prices, which appears to be sustained. In fact, the gold stocks are all pretty much forecast. Well, they're suggesting that the gold price isn't going to stay anywhere like this, and that just doesn't seem to be the case. So. Yes, the market has been more focused on cryptocurrencies and technology stocks, and the investors have been very slow to come back to mining. And I'm afraid we've had an outflow of funds over the last 10 years, and we're just starting to see inflows back into AIM. We're just starting to see the market becoming more positive again. And in fact, I was talking to a metals trader who's also an avid AIM investor, shall we say, in the week. And he was saying actually they've started to notice that the support for these new fundraisings are very much better than they were. So I think there's going to be there's more action coming, and definitely there's a change in the air.
Now, taking a look at gold, as you've mentioned it, I mean, they have been moving steadily higher. We're seeing a bit of consolidation there. Breaks through that 3,300 figure, and now slowly creeping up towards the high of around 3,500 seen 22nd of April. Are you expecting to see gold prices continue to edge higher, or do you think now that we're waiting on that potential trade deal, of course, the final, so only when the fat lady sings, when the details come out, when we actually, know whether it's a done deal or not. But if we do get some sort of deal, do you think that maybe gold might ease off, or is the movement in gold very much down to that big, beautiful bill?
I know that the world is trading a lot on the big, beautiful bill. But I think gold is really reacting more to other fundamentals. China has been buying lots more gold. China has been encouraging its population to buy more gold. There is a lot of that going on. Every time the dollar weakens, the gold price goes up.
Yep.
So I think you got it when you said, is it going to edge higher? Yes, I think it is going to edge higher. There are some experts forecasting a bit more of a jump. For me, I see this as a bit more 2 steps backwards, 3 steps forwards type trading. Mm-hmm. It will, because it takes a little while for the gold buying community to get used to higher price levels. I think they should feel quite a lot of supporters in there now. I think we know that Western countries are effectively going to issue a lot more cash in terms of bonds. That means Western balance sheets are going to get bigger. And there's inflation in there one way or another. We can't get away from those inflationary forces. We are still paying for COVID in many respects. Mm-hmm. Gold is, we're now seeing quite a lot of people setting up gold-backed crypto funds or cryptocurrencies. I'm not an expert in any of that, but the more they back those things with gold, the more gold will get stored in vaults to support that. That takes the gold out of the market. That makes the price go up. It's as simple as that.
Cool. And you also like copper and tin. We don't have much time left, but take us through your strategies for both those.
Well, look, there's lots of copper being used in electrification. The more electric vehicles we drive, the more charging points we have to have, the more the national grid has to be boosted to provide all that power for everybody's cars. And that's not just the UK. That's in China, that's in the USA, maybe slightly not happening so fast in the US, but look at what happened in Spain when the grid collapsed. Everybody lost power, and that's a disaster for a politician. When you lose power, you lose votes. It's as simple as that. Mm-hmm. So it's very easy to spend money on grids and bolstering the grid. Look at what happened at Heathrow Airport. Another example of aging grid infrastructure.
Yeah. That's right. And is that the same reason for tin as well, the whole EV play?
Tin is similar. Tin is similar because tin is used for tin solder. So almost every electronic device in the world is soldered with tin. And as we move on to AI, as we have more data centers, as we have more AI-enabled devices, there will be more tin soldered connections. And it is, where are the new tin mines? There's very, very few mines that are coming on stream to produce tin. So it's a tight market.
Right, and on that note, thank you very much, John Mayer for SP Angel. There are lots of people coming online saying thank you very much. Loads of questions to Andrew McKilvey saying, Ange, if you'll excuse a second question for John, any views on GGP and its ASX cross-listing? If you have a...
Greatland Gold is a great company. The deal they did to acquire Newcrest stake in the project was fantastic. They're going to be one of the top 5 gold producers in Australia. They have propelled themselves to the next level. I think the ASX listing will go really, really well. There'll be tons of support for that. Why wouldn't you want to buy it? I think it's going to be a good stock.
There you go, Andrew McKilvey. You heard it here first from John and Steve Davies saying thank you very much as well. Steve Davies, thanks for the Filtronic tip there. I will have a look after this. And John, it'd be amazing to have you back again. Thank you so much for taking time out of your travels to all these mines to come and talk to us and our trader friends. I'll catch you after the show. And for those of you wanting to catch all our other series, go to the YouTube website, slam the like and subscribe button as well, because when you do that, it puts our programs in front of more faces, and that means we get to do more cool stuff like this, especially for you. John, do like and subscribe if you'd like to subscribe to our channel.
I'm not very good at doing that sort of thing, but I will.
We'll talk you through it after this. Thank you so much. A pleasure having you on. I'll see you guys back tomorrow at 7:30.